The global economic chess game, challenging Western perspectives on China. China and the West, a reality check on economic narratives. In a world where 9 out of 10 people reside in developing nations, there's a stark contrast between Western and Global South perspectives on China's role in the international economy. Meet Dr. Kei Yu Jin, a bridge between East and West, whose unique insights as a Harvard-educated economist at LSE challenge conventional Western narratives about the world's second-largest economy. As we move into 2025, following the political transitions of 2024, including potential changes in U.S. leadership, a critical question continues to shape global discourse. How will the evolving political landscape impact the most crucial bilateral relationship in modern history? Dr. Jin presents a compelling counter-narrative to mainstream media's portrayal of China's economic trajectory. Rather than a story of collapse, she reveals how external pressures have paradoxically catalyzed Chinese innovation and growth. Think of it as pressure creating diamonds. The more the West pushes, the more China adapts and evolves. Breaking down the misconceptions. Imagine trying to understand a chess game while only seeing half the board. That's how Dr. Jin describes Western attempts to analyze China through purely Western frameworks. Let's examine 3 critical myths. The collapse narrative. Western media often highlights China's disappointing 5% GDP growth, portraying it as a sign of failure. But let's put that in perspective. Would you call a student failing if they scored 85% instead of their usual 95%? Especially when their classmates are averaging 50%. China's economy isn't collapsing, it's normalizing after years of rapid expansion. The real question should be, how is China achieving this growth while navigating geopolitical headwinds and domestic challenges? The infrastructure. China's high-speed rail network, once dismissed as excessive, is now profitable and reshaping how 1.4 billion people live and work. Consider Amazon's early years, heavily investing, running at a loss, but dominating the market in the long run. China's strategic infrastructure investments aren't about short-term profits. They're about long-term economic transformation. The manufacturing evolution. China isn't stuck in the middle-income trap. It's leapfrogging it. From solar panels to EVs, China has evolved from the world's factory floor to its innovation hub. The country now leads in sectors once dominated by Western firms, forcing global competitors to adapt or lose market share. The impossible dream of decoupling. Here's a thought experiment. Try going one day without using anything containing Chinese components. Impossible, right? That's why over 120 countries count China as their primary trading partner. The global economy resembles a massive Jenga tower. Remove China, and the entire structure becomes unstable. Despite political rhetoric about reshoring and de-risking, major Western companies aren't leaving China. They're doubling down. Apple, Tesla, and countless others know they can't ignore China's market size, efficiency, and supply chain dominance. The reality? Economic interdependence isn't optional, it's inevitable. The reality check: American businesses must adapt. Western companies now face a stark choice: adapt or decline. Consider Ford's CEO recently visiting China, not as a diplomatic gesture, but out of necessity. Chinese EVs aren't just competitive, they're superior. BYD is outselling Tesla, and US automakers are scrambling to catch up. This isn't about politics, it's about survival. The West has long assumed that technological leadership would remain in Silicon Valley and Detroit. But today it's Shenzhen and Shanghai setting the pace. Companies that fail to recognize this shift risk losing relevance in the industries of the future. Looking ahead, can the US and China coexist productively? The question isn't whether the US and China can decouple, they can't. The real question is, how can these economic giants coexist productively? Will the US shift from confrontation to strategic competition? Can China sustain its innovation-driven growth while managing domestic economic challenges? How will global markets respond to increasing trade restrictions and technological fragmentation? The answers to these questions will shape the global economy for decades to come. Your thoughts matter. If you found these insights valuable, Help spread this more nuanced understanding by liking, sharing, and subscribing to this channel. Let's elevate the conversation beyond simplistic narratives and explore the complex reality of global economics together. What's your take? How do you think the US-China economic relationship will evolve in 2025 and forward? Drop your thoughts in the comments below. Let's discuss. And be sure to stay tuned for our next deep dive into trades and geopolitics.